All right, this week we are going to be starting off somewhat of a series. We just wanted to lump everything together on insurance, and we're going to start with life insurance this time. So, last episode we talked about politics and taxes, and now we get to talk about death. So I feel like let's just get it all out of the way while we can. We're going to start today with life insurance. There's a lot of, I think, just misinformation about when you need it, what exactly it's for, how some of these products work, because there are just so many of them. A lot of people have some life insurance at work, but commonly not enough. So I think that's where we're going to start today. Elliot, why don't you just, I guess, at a high level, like break down the different types, and then I think we'll talk about what we feel professionally most people need versus what else might be out there.
Yeah, and let me start by saying, Matt, I'm actually really excited about this conversation. I know we're talking about life insurance, and that doesn't excite very many people. And unlike the politics conversation last week, I wasn't super excited for that. This one I am, because it can be some really simple changes in your life that can make a profound impact if you ever need it. And a lot of people, there is a lot of misinformation. So I don't know, correcting it, but educating and informing people so they can make the right decision around this. And it's not just hands off, I have life insurance, they work, I'm okay.
Yeah.
Well, you might not be. So I think starting with types of life insurance, a very simple and a very important one is term life insurance. So the idea that you want to cover a certain period of time. And if you die within that period of time, the policy pays out. So you could have, for example, a 10-year term policy. If you got it today and you died within the next 10 years, it would pay out whatever the face amount or death benefit amount. Maybe it's $1 million policy as an example. And that would go to whoever you listed as a beneficiary on that form. If you live 10 years and 1 day and you didn't have any sort of thing after the policy period, there's some other things you can do on that. But let's assume you just let it die at the end of that or lapse. There's no payment. So you paid, you had that coverage, you end up using it. That's okay.
Yeah.
Um,
Yeah. And I'm gonna pop in there. So
yeah.
so what Elliot's saying is worst case scenario, you're still alive and you paid some money for a period. I'm just joking. I took that from my life insurance sales days. But before you move on, like why would you need like a different amount of term? Like why would you need a 10 versus a 20 versus a 30? Like what are some common reasons you see with clients? I certainly have some stories, but
Yeah, I mean, I'd love to hear them. I think for me, just very simply, we're covering different time periods. So maybe it's a grandchild or a child's education. Maybe it's earnings until retirement or a few years before retirement. Maybe it's caring for a parent. Just think about anybody that might be dependent on you financially and what period during your life or how long is that going to last? What about
yeah.
for you, Matt?
Yeah, no, I think you hit some of them on the head. I mean, commonly I see like, people who just had a child, like they want to protect their income and, any additional expenses that might be needed to help raise a child to, when they're college age or to have something left there for college, like you mentioned. So, maybe something like a 20-year term to cover those 20 years. There's some other strategies out there, but I don't think that's applicable for today. But then again, like something like a house, right? Like that's a 30-year liability. So sometimes it's just easier for someone to get a 30-year term to cover a portion of that.
Yeah, I mean, I'll speak from personal experience. I got a
Yeah.
very large 30-year term policy because I didn't really want to worry about different stages of life. I just wanted one policy and was willing to maybe be slightly overinsured at certain points in my life, instead of saying like, oh, I could do 10 years for this need, 20 years for this, and 30 years for that. I just did one to make it simple, but you can
Yeah.
structure it differently.
Yeah, absolutely. And yeah, being overinsured is not a bad thing if you have low cost insurance. So we're not going to go too deep in the weeds on that. But why don't we move on to some of these other types? So we covered term.
Yeah. I mean, I think if we were to categorize this very plainly, some sort of permanent life insurance. And within permanent life insurance, there's a lot of different chassis or vehicles, whatever we want to call it, to get that coverage. But basically, it's intended to last most of your life, if not all of your life.
Yeah, and this is something before we kind of go down this rabbit hole of the permanent. Elliot, I know we've talked about this before and I've just heard it from too many planners, but a lot of times permanent life insurance is overused or, in our professional opinion, misused, where, you can quote unquote be your own bank, or, have tax-free income for the rest of your life or something like that. Some variation of those things. So, we just want to give a caveat as we go through talking about some of these, different situations where those might be applicable, that if you do find yourself holding one of those contracts and maybe you don't understand it, because these can be very, very complicated products, and that's why we're not going to go too far in the weeds today. But if you do find yourself having questions about why do I have this, or why do I have a whole life contract, or what do you mean there's cash value in there, like, feel free to reach out to us. We've seen this enough, and if we can't help you, we'll be sure to find someone who can. So,
Yeah.
Elliot, why don't you? I know you were just at an estate planning conference, so why don't you tell us about, kind of the structure or idea of some of these products, and why they might be used for certain scenarios.
Yeah, before I get into that, Matt, I'm curious. I have a percentage in mind, but I'm curious for you. What percentage of the population do you think like the whole life or permanent type products are truly applicable for?
uh, I
If you
mean,
had to guess.
I'd say like 5%, and I think that might even be high. Maybe I'd 5 to 10 if I had to take a range.
Okay. I think you were being more generous than I was. I was going to say probably around 1%,
That's
maybe
why.
up to
That's why I thought
5%.
five might be too high.
Yeah. So I wanted to point that out. And I was curious about your opinion on that, just for how rare this actually is. If we consider the general population, but then even within a financial planning practice, how often do these actually get implemented? It's still very rare. So I think it's important to, like Matt said, understand your product and why it's there. And if you don't, reach out to someone who can help you understand that. So let's talk about a little bit about when permanent products actually do make sense, because there are some sources where it makes actually really good sense to do that. And that's why I am not, I always hate when insurance gets a bad rap, because it's not insurance as a whole. There are really good uses for it.
It's
Um,
important. We
it,
can't do what
it
we do without it.
it is really important. So some things, and we can go into detail on any of these, but things that I see oftentimes, if someone is over an estate tax exemption amount, whether that's state or federal. So coming from Washington State, the estate tax exemption amount is about $2 million. So if you live in Seattle and have some assets that you've built over a career, there's probably pretty good odds you're over the estate tax exemption amount, and will likely owe estate tax if you're married at the second death. If you're not, when you pass away. Oregon, right below us, has about $1 million. So good odds there that if you're doing any sort of planning, you're going to be over that. Obviously, the federal amount's very, very high right now for combined people. So most of the population isn't falling into that. But if you're trying to pay some of that tax at the end of life, and a permanent product can be really helpful, where you structure it to pay a set amount per year. And as long as you pay that every year, you design it out long enough, you die within that time period, and you can design these out to like age 120, or I think maybe even longer. It's going to pay a certain amount, and you can set it up, and it's called an ILIT, or an irrevocable life insurance trust. So it passes out of your state. There's some more advanced estate planning concepts here. But the key is that if you have an estate tax exposure problem, this could be helpful, particularly if a lot of your assets are illiquid. So think about a business or homes or rental properties, and or you have a lot of money in pre-tax retirement accounts. And the reason this is important, Matt, do you want to talk about that?
Nope. You keep going.
Okay.
You're doing great.
The reason for that is any money you take out of an IRA is going to be taxable as ordinary income. So if you pass away and the only assets available to pay for this estate tax is IRA money, you're now distributing a large chunk of money, because a lot of people who are having exposure to estate tax, we're talking about potentially hundreds of thousands or millions of dollars. So pushing that out of an IRA, you're going to get pushed up to that, essentially probably the highest tax bracket very quickly. And then you're going to owe tax on that distribution that you just took. So it's a cascading effect where you're sort of owing tax on tax on tax, which is not, it's not helpful if you're trying to maximize what you're giving to heirs or beneficiaries. So that's where the life insurance can step in, take care of that estate tax. Then the IRAs can go to whoever the intended beneficiaries were.
Yeah, yeah. And what I want to key in there, just like a quick, I mean, this may be too broad of a rule, but if you haven't worked with an estate attorney, or have no idea like what your estate liability could be, and you have a permanent product, I think you should be asking more questions about the permanent product, right? Because again, what Elliott's talking about here, they're very nuanced and very complicated most times products and estate planning strategies. So if you don't have a will and you have a permanent life insurance product, I think there's more questions than answers as to why you have that product. So just a
Yeah.
general rule of thumb, I'm not going to say that's 100% accurate, but I'll take my chances on rolling the dice and say probably 90 to 95% accurate. Would
Fair.
you agree with that?
Probably.
Yeah.
Unless you're uninsurable, you're dying soon. There are some cases where I could see maybe a permanent product makes sense, but I think it always makes sense to start from a place of questioning why
Yeah.
that's there.
Well,
And
if you're terminally ill and don't have a will, you should have a will, right?
definitely.
Yeah. So,
Um, I
but
also
yeah,
want to say, Matt, maybe jumping back. So IRA, liquid assets, if we think about someone who has a business, sometimes we come across business owners or a lot of real estate. The estate tax is often due within 9 months of your death. If that's a bad market cycle for real estate, you don't want to be forced to sell, I don't know, 4 rental properties at a 30% discount because that's what they're going for at that time. You might want flexibility to be able to sell that after that 9 month period, or a business. Sometimes people can't even sell businesses in 9 months because it takes longer to go find the right buyers for that and come up with a transition plan. So that's where, again, life insurance can step in to pay some of that estate tax or cover beneficiaries. You have a lot of flexibility in how you want to structure that. The key is giving your estate or your executor flexibility to either keep these assets, if you were trying to keep them maybe in a family, for
yeah,
example, or offload them at a more reasonable time.
yeah, and I think you hit on a really important, point there with the business or with real estate, liquidity, right? So just the ability to have cash to pay bills or pay expenses, all that fun stuff, and that's really like when we go back to like the core concept of why life insurance, whether it's permanent or term, is so important. It really is there to provide a pool of money for you to pay your obligations or your bills or your mortgage or kids' education if some of your cash flow goes away in the form of losing a spouse or a parent or something like that. And yeah, it's just one of those things where a conversation I like to have as we talk about this with clients and understanding like how much is the right amount, which there really is no perfect formula for that. But a question I always like to ask is, are you going to want to go back to work right away? Or what is like the grievance time that you'll have at work? And is that enough? Because if it's not, it's not just a conversation then about your bills and what income you're trying to replace from your spouse, but also how much of your income do we need to account for if you don't want to go back to work? And Elliot, I know unfortunately you lost your dad. Do you want to talk a little bit about that process? I know it's different because you run your own business, but I mean, it just as never having been through that before, like what was that experience like with you, and how did it like? Did you feel pressured to get back to work, or were you able to take space and grieve properly?
Yeah. Yeah, I know. Like, that's a tough question to answer. I'm trying to think. Maybe we rewind when my dad got sick, right? Because my dad was sick for 7 years. So it's not like I could work all that time. I mean, I worked still a lot of hours, but I did work it out with my prior employer that, when my dad was getting cancer treatment, I would take some time off to do that. And they were very gracious about that to allow me time to be there. And then as he passed and everything, like you do miss a lot of work time and or you're making it up outside of work hours because stuff still has to get done. So it's, when you lose someone, there's a lot to do administratively, grief, all of that. I was able to grieve along the way. So there was less of that when he passed away. But I know working with widows, even if you want to go back to work, you might be in a situation where brain fog or widow fog, whatever you want to call it, doesn't really allow you to function at the same pace or in the same way that you were used to prior to losing your spouse. So it might not be a function of want. It might be a function of like, can you actually do that right now? Everybody thinks, hey, we'll just go back to the way it is, but that rarely happens within particularly the first 2 years. So having that cushion for life insurance can be helpful.
Yeah, yeah. And another one I commonly see too is just like even with retirement savings, right? Like after you lose income, if there's not enough, proceeds there to help kind of make up either for a portion of the mortgage
Yeah.
or just some of the other expenses that have come into play, like sometimes that can force the spouse into reducing their retirement contributions. And now you're already running at a shortfall because, the income's gone and now you're saving less. And it can really create some challenging situations to not only preserve yourself now, but also preserve your financial future.
Yeah. And it frustrates me seeing those because I think it's just a conversation about understanding what it is that they would need. Because in most people's scenarios, term insurance is not super expensive.
No, I mean, I have 1.5 million, and I think it's a little over $100 a month. And I think my wife Allison's is like 80 some dollars a month for $2 million of coverage. She's little healthier than me. So yeah,
Yeah. And I mean, that's a good example, right? That's, you know, what, two meals, like for Allison's, for example, maybe two meals out in a
if
month,
that,
if
if
that,
that,
right?
yeah,
That you could get coverage. And so I think just having that conversation with yourself, with your friends, with your family, with whoever's willing to listen to you. I mean, please have that conversation. Hey, I got life insurance. Do you have enough? Have you calculated that? Because at least personally, I don't know, Matt, for you, but I rarely see people have either enough or overinsured. And I always like to err on the side of caution because most people aren't going to miss the extra $20 a month that the, hundreds of thousands of dollars it might buy you in death benefit.
yeah. I mean, I would agree with you. I think a lot of people hear that, oh, like we have good life insurance through work, or, it's the classic, our benefits are good, which they may be, right? But a lot of times, at most, an employer is going to offer you 1 times your salary, maybe two if you're lucky, like as the base benefit. And I just don't think that's going to go far enough. And I think too, like, especially with at times when we've had stagnant wages but rising costs of living, like, well, now you have stagnant death benefit too, and that's not going to help you out as things get more expensive. But yeah, I would agree with that. Even if there is a voluntary option, I feel like most people just take the base and they think that's something which will probably pay for final expenses and maybe some bills, but I don't think it's going to be enough to really preserve your financial future. And yeah, I think another common issue I see is they hear, well, my friend has, or the guy on the podcast has 1.5 million, so I should have 1.5 million. And that's really just a function of like the conversations Allison and I have had together. Like what would you need to be okay? Like would you want to go back to work? Like what do we spend now? Mortgage, all that fun stuff. But that's the number that we settled on, and we could have probably gotten more. We could have certainly gotten less, right? We could have gotten nothing. But I think it's very dangerous to ask for advice from friends or family on how much they have, because a lot of people aren't having conversations about living expenses and all those things with their family anyway. So it's kind of a misinformed number
Yeah.
oftentimes.
And there's great calculators online. Like if you
Yeah.
type in life insurance need calculator, it'll walk you through mortgage, kids, college, income replacement, all of that to come to a number. Now, I think working with a good insurance agent to come to that conclusion is better, but it'll at least give you a gut check of, hey, am I in the ballpark of what I need to be?
Yeah. And Elliot, you said good insurance agent. Like what are some qualities of a good insurance agent?
Yeah. So for me, I think it's the ability to write more than one company. So not to get too technical here, but not a captive agent. So a captive agent is only going to write insurance for one insurance company. There's nothing wrong with that. Um, but I want someone who can go out and shop a variety of products. If they only have one solution, that's problematic for me. I want to go see, I don't know, 10 or 15 different insurance carriers to see what is the different premium. And given my health risks, I might underwrite better at one carrier than the other, which means I might have a cheaper premium or can afford more death benefit. Um, so I think it's the ability to write all of that. I think it's someone you're comfortable with. So having a conversation, making sure you understand it as you go through the process and the educational piece. What would you add to that?
Yeah, I would add that they're information seeking before they submit an application.
Mm.
So I think a lot of what Elliot said will kind of go hand in hand with someone who's doing this. But like he said about the underwriting, right? So when you go to apply to get life insurance, they're going to ask you a ton of questions. I see this a lot, like no judgment to anyone out there listening, but like some of my clients do partake in like recreational marijuana use. Some insurance carriers hate that, some don't care at all. The same can be true with certain types of mental health concerns or anxiety disorders or just past medical history in general. And so having an independent agent or non-captive agent who's going to be able to get a lot of that information before and say, hey, Elliot, I think we have the best chance of getting a favorable underwriting outcome with this company versus that one. I think that's going to make it more likely that you actually get the coverage you want, get the price you want, and don't have those nasty declined coverages on your application record, because they will ask that question the second time around.
Yeah, and I think that's a really good point, Matt, that the agent may suggest that you don't apply right now and you wait to apply later, in which case you might want to go back to a group policy or some sort of society membership. Because once you have a decline on there, it's very, very hard, if not nearly impossible in a lot of scenarios, to go get insurance.
Yep. So look out for captive insurance agents who only sell their company's insurance. I think it's fair to ask how they're compensated. If they earn more from a certain company versus a different company, if they do place the insurance. If they ask for an application on the first meeting or appointment with you, major red flag. And then secondly, too, like I would just, I beg you to understand where their calculation and recommendation for a product is coming from. And I hope we gave you enough tools in terms of like when we feel permanent insurance is applicable to help you avoid that, because it's just like it's a trauma, I think, that all fee-only financial planners have. Like we've just seen it too many times where it's like, why does this person doesn't understand this thing? They don't need this thing. Why do they have this thing? And that can just be a really hard thing to let go of after you've been paying it for a few years.
I can. Hey, Matt, I want to go back, if we're okay on this, to the group
Yeah.
insurance. You had talked about one of the limitations or downsides to that is the amount you can get.
Yeah.
There are some other downsides to group insurance that we haven't covered that I think are really, really important to hit on, and why we're talking a lot about separate term policies for people. Do you want to talk a little bit about that?
Yeah, I think the biggest one that I always look for when I do these reviews for my clients, especially if they have opted into that voluntary coverage or some of those extra like amounts of coverage through their employer, is whether or not it's portable. And I have seen this play out like in really bad ways in the past, where the client didn't necessarily know that. They then became disabled and were later let go from the company, and now that insurance can't come with them. So they already have like a pretty nasty health record. It's going to be tough to get new coverage, but they need it, and they can't convert that group policy into their own individual policy without paying like either astronomical premiums or just not able to do it at all. So that's the first big one that I look for. And to kind of give some context to what Elliott was saying, if you have your own private policy, doesn't matter if you lose your job or start a new job that doesn't have as good of coverage or doesn't have life insurance benefits at all, or you can't buy as much, it's yours to keep until either you don't feel the need to have it anymore, it lapses, or you just don't want to pay the premium, I suppose. What are some other ones that you look out for, Elliott?
Yeah, I mean, that's the key thing for me. I tend to ignore group insurance for the most part. I consider it sort of gravy or whipped cream, whatever, the toppings on top of that, just because of those downfalls that a lot of it's not portable. And even if it is portable, I go a step further. Don't just ask if it's portable, but what's the cost to convert it? I ran across a scenario before where someone's like, hey, it's portable. Okay. I asked them, what does it cost? Well, they got the quote. And I don't remember the exact thing, but it was outrageous. It was like
Yeah.
$8,000 a year for very little coverage. There was just no way that they were going to pay it. It didn't make financial sense. So I think that's something to keep in mind, as well as increasing premiums as you age. So a lot of those group policies have bands that if you're between 30 and 35, it's X dollars. If you're between 36 and 40 and so forth. And as you get up there, it can get very expensive. So you might think, oh, I'm just going to go with group. It's super cheap now. But then as you get later on, the group policy could go away. You could switch jobs. It could be really expensive, in which case maybe a separate term policy would have been better all along, even financially. So I really like those separate term policies because it doesn't matter what happens with your job. It's like health insurance with this country, that a lot of health insurance is tied to a job. And a lot of us are frustrated by that and aren't willing to switch because of coverage. It's the same thing in the life insurance world, that if you can take it outside of your employer, now you have a lot of freedom and flexibility, and you can lock in the premium for whatever the term is.
Yeah, yeah, and another thing too is, especially with a lot of these group policies, the optional or voluntary additions, like they're usually priced based on your age, so that policy could actually get more and more expensive as you go through. Whereas if you just go ahead and bite the bullet and buy your own, I shouldn't even say bite the bullet, because it might actually be cheaper in the long run. If you just go buy, if you go do that work and buy your own private policy, like you're locked in for whatever term it is you choose, and it's not going to tick up on you over time. And most employer benefits should have like a table or some outline of what the cost is for each age band. But when you're pricing a group of people, they can be a little bit more specific as to how much they want to charge those people versus just you, which can be advantageous or disadvantageous, right? And so I guess that's one positive that I look for is, what are the underwriting requirements for
Yep.
some of this insurance? So if you do find yourself uninsurable, or you don't think you're likely to get approved, it may actually be helpful to go buy as much of that group before you go apply to a private policy, just so that you have something and you can say on that application, I've never been denied for coverage. And often for simple enrollment, that's what they will ask. They won't ask for your life story or anything like that. So that can be a good thing, but it can also be a bad thing if if it is more expensive. But that's just one of those nuanced things where it's like very situational, but it can honestly be a huge swing for people who are unlikely to get insurance.
Yeah, definitely. It can be a lifesaver for people.
Yeah, absolutely. And I think we'll come back to that as we go through this insurance series here, because so many times insurance sucks to pay for. Like, we all hate it, but it's one of those things where when you do need it, it is a lifesaver and can just like really help not crush your finances or crush your spirits when it comes to saving for all the fun things that you want to do. But I think we should come back to the cost and coverage, especially when we talk about home and auto insurance. So,
Oh, that sounds good.
um, unless there's anything else you want to add to our conversation today, I think we'll wrap up life insurance and we'll move on to slightly happier things as we go forward. But yeah, thanks for joining today, Elliot, and it was a fun conversation.
Likewise, Matt. A lot of good tidbits today.